Good morning, everybody. Happy Friday. So Focus Trades members, I am going to be out of the office for a couple of days. I won't be with y'all this afternoon. I'll be back on Monday. Just a quick little trip for my birthday, but it's a general statement team. Really proud of how everybody traded this week. And here's what I'm thinking. So we come into the week here and we got the squeezes on the Qs, the SPY, and a whole bunch of names across the board. The squeezes fired. We made some good money. We got a good move. But at this point, guys, I think the move is done and over with. If we take a look at the 4-hour charts, and you kind of look here into Tuesday's session, we quickly started to lose that momentum. The squeeze indicator starts going from light blue to dark blue. It's a potential heads up, guys, that call it the easy part of the move or the fun part of the move is over. And not that we're necessarily going to roll over from here, but I do think, at least personally, the next couple of weeks going to be a little bit of choppiness, right? A whole bunch of back and forth. But I think that we should be grateful for some nice opportunities we just had. So we don't want to force the issue. And the major goal at this point, guys, is that as we get those positions on near the mean, and as we lock profits in the move away from the mean, we want to protect those profits right now. So that should be your number one goal. And as earnings is coming up, as elections coming up, I think you want to be really picky about stock selection. So what I'll be focusing on here for the next couple of weeks, guys, as far as new opportunity, is finding those stocks that are in good trends, making a pull back towards the 21, looking to get some positions on for continuation. So a good example of this is Docusign. So Docusign here, guys, you get a really nice trend starting here as the daily squeeze fires. Earnings aren't coming up too soon, so you get the nice move off the 21, and you get a nice little dip here yesterday. So what I did, liking this trend and liking the stock itself, is on that dip yesterday, taking advantage of the put premium coming in. And what I did here, guys, was jumped into a put credit spread for the 20th of November. So give it some time, give it some cushion. I'm out there, sold the 210s and then bought the 200s. So I like the stock here. I like the setup. I like the probabilities of it continuing this trend to the upside, but I'm also respecting the fact that the market is looking a little bit tired here and could potentially fade just a bit more. And obviously that's going to impact Docu, pretty much every other stock. So to make up for that potential, I went with a put credit spread underneath the 21 EMA. I gave it time. I gave it cushion underneath the mean. This thing continues to hold up. We'll be in good shape. Another stock, guys, at the same mindset here is Restoration Hardware. So unlike the Pelotons of the world, not crazy extended, you get a nice gap up after the most recent earnings announcement. We go into a daily squeeze right near the 21 EMA. So got to put credit spread in this one, looking for over the next couple of weeks that squeeze to fire. So on that one is also November 20th execution, and I sold the puts down there at 350 and then bought those 330s as protection. So those are my open long positions, guys, for swings. And then I think my best move of the week here was getting those call credit spreads on the Qs. So important to keep in mind, guys, that when everything seems really good, right, and we got all this momentum and it's quote unquote easy money, it's typically the best time to get your hedge in place. If you're holding these long positions into a market that you know is extended, and by extended I mean, the easy move here is the move off of the 21 EMA. And once we've made that 2 to 3 ATR move away from the mean, there's just a growing probability that sometime soon we're either going to run out of gas and begin to chop or quickly head right back down to the 21. So to continue playing the market to the upside, while the index is extended, you're still going to see good setups presented. I think it's really important, guys, to go ahead and get yourself an insurance policy. Whether you want to buy puts on the index, whether you want to sell a call credit spread, it's good to do it before you need it. So I think my best trade of the week was getting those two sets of call credit spreads on the Qs. One of them I sold calls up there at 304, which I still have open. And on the other one, guys, which I closed on, Wednesday, I sold calls up here at 308. Now here's why this is important. The market's extended. If you want to continue to play setups to the upside, you need to be prepared for a fade. So what I did with the call credit spreads here, guys, was I structured them to have a max profit between the two of them of about $3,000. Now, I closed the first one for a $500 profit, and I have the second one open right now, which has about $2,000 a max potential profit. So the way that I look at it is that I went and got myself, call it a $2,500 insurance policy. Meaning if the market doesn't continue to rally and we just begin to chop back and forth, or we begin to fade like we have here, I got a potential of $2,500 of premium coming in from the $500 I locked in the first spread and the $2,000 on that second one. So here's why this is important, because as we're extended, I'm still taking a couple positions to the upside. You gotta know a fade could be coming sometime soon, and it's exactly what happened to me yesterday morning. I had positions in Tesla and in Activision. Tesla, guys, at the open, because that trade did not work, I took it off for about $1,000 loss. Because Activision did not work, with no hesitation, I closed that one for about $700. So I took a total loss of $1,700 there, but then we take into consideration the potential $2,500 max profit we're going to get from the call credit spreads. We're still going to walk away here potentially between the three of those trades plus 800 in the green. If I didn't have those call hedges there, I'm eating that full $1,700 loss. Now, it's not a big loss relative to account size or position size, but as we're extended, like I mentioned in the beginning of the video, number one goal, guys, is make the money in the easy move and then protect as much of it as you can. So while I'm really happy that between the three of those trades, I might walk away to the tune of plus 800, more importantly, I didn't give back any of the profits that I made on the easy move. So really important, guys, I think in this environment, if you want to keep playing the move once the market itself is extended, get yourself an insurance policy just in case we don't continue to pump. And over the next couple of weeks here, as we have earnings coming up, we have the election coming up, I think the squeeze is over. I think the move is done. Expecting a whole bunch of choppiness here. So with that being said, guys, focus on clean trends, clean setups, pulling back to the mean, looking to catch a continuation. So a few that come to mind is Docusign, which I know a couple of us in the group got. I know a handful of us got Restoration Hardware. You got Shopify, finally coming down to the 21 yesterday. See if you get the continuation here. Another one, guys, is Penn, P-E-N-N. Right, holding up just fine. And then there's names that really went on a big move that could potentially come back down to earth. One that comes to mind is TTD. Right, see if over the next couple of weeks, guys, we can get that pullback towards the 21. And then you have names like Peloton that just seem to have no end in sight. So I'm not looking to chase this move. What I prefer is to find a stock that's really been strong, like a TTD, but then wait for the pullback to the 21. Rather than trying to chase something like Peloton, focus on something like Docusign at the early stages of its move. So all things to focus on here, guys, for the next couple of days. Like I said, not going to be in the office today, so Focus Trades members, you're on your own. Work as a team to make me proud. I know y'all will, but this is what we're looking at for the week, guys. Month of October, just about 11,000 so far. We got about 5,000 of max potential profit, and we're able to close a total of 3,000 this week. So a couple weeks left here in October for me to reach my monthly goal. We're slowly getting there, and I'll keep you guys posted. Talk to y'all soon. Trade safe today.